So this is the bank reconciliation example 2, and this one has a few errors in it. And the way I set the problem up is kind of the way you would approach it if you were actually doing a bank statement. In other words, when you walk into a bank statement and you start going through the procedures that we did in the first example, you're not going to have written out somewhere, oh, these were the errors. No, you're going to do the bank reconciliation. It's not going to reconcile, and then you go looking for errors. And so that's how I set this problem up. So you should have example 2 in front of you, the notes there, and then we can just kind of work through it. So let's start with the bank side of things. They give you in the problem the balance per bank of $13,332. Okay, so we've got that. 332. Make sure I've got the numbers right. And then they also give us the deposits in transit and the checks outstanding. So we know we've got to add the deposits in transit of $2,600. Oh, and we could say what that is. Those are our deposits in transit. And then they give us the checks outstanding of $1,225, so we're going to take those off. Okay, so this is our checks outstanding. And so when we go the balance per bank plus the deposits in transit minus the checks outstanding, we get the number 14,707. Then we move over to the book side of the problem, and they give us the balance per books of, what was it, 13,287. And then they give us a bunch of other information. We collected a notes, the bank collected a notes receivable and interest on the note of $4,500 plus 80 interest, so the bank collected the notes receivable. It was the interest revenue. Okay, we got that. And then there were some other things. A collection fee on the note. Oh, okay, so a collection fee. You have to take that off. That's a deduction of 25. And then we had the, another NSF check from a customer. So that amount has to be deducted. Okay, so we'll do that. And then there's a check order charge of, what, $35. Okay, so there's 35, and that's the check order. Okay, so now when we add and subtract these out, we come up with $16,499. Now this is more typically what might happen when you're doing a bank reconciliation. It does not reconcile. Okay, so now's when you have to go back and you have to compare, if you were in the real world, you'd be comparing the deposits listed on your bank statement with the deposits that you had recorded in the books and see if there were any discrepancies there. You don't do the same thing with the checks. In homework assignments, a lot of times these errors are given to you, as they are here. And so as far as correcting the errors, let's see how I'm going to do this. And here's where you're going to have to just rely on the notes for this. The cash sales were deposited in the bank for $1,720. Okay, so that was, I'll go up here. Okay, so this is the first error. We had this is a deposit error, and $1,720 was the amount deposited. Okay, so that's actually the correct amount. It says the entry made in the cash receipts journal was wrong, and they had, this is $1,820, okay? So we've got a $100 error here. This is the correct amount, and this is the amount that was on the books. So now it's helpful to sort of think about what's going on here? We know we're gonna have to make a $100 adjustment, but which way? Well, we told the books, and think about this, you told your bank account you put in $1,800, but you really only put in $1,700. The books have to get adjusted down. So we're gonna have to make an adjustment down here. Let's see, so we're gonna have to just move all of this down a little bit. So this is a deposit error. And so we're going to adjust it down $100. Now if we add it up, we're still not going to balance. And so there must be another error, okay? When we, and the other error, the second error, is that on January 18th, the company wrote a check for $911. Okay, so here's your second error. This is the company check said 911. This is a check error. And what really happened was, oh wait a minute, I'm sorry. They issued a check for 911. So this is the correct amount, okay? But what they put in the books, okay, so what's on the books is wrong. They put 119. Okay, so the difference between those two amounts is going to be a $792 adjustment needed. And again, we have to ask ourselves, which way does this adjustment need to go? Well, we wrote a check for about $900. We told the books that we wrote a check for about $100. So this is another adjustment down, because we have to adjust it down because the books think they've got a lot more money than they actually do. So here's where the check error is also going to be deducted in this case. Okay, so now when we go back and re-add everything, I think you will find that we do come out at an adjusted balance of 15,607. Okay, so here's our new adjusted balance for the books. Okay, so now when we come to, we've got the bank reconciled properly, but we now have to do the journal entries to tell the books about this and all of these items. So every item that gets adjusted on the book side needs a journal entry. So we would be debiting cash for the $4,580, and we would be crediting note receivable, we'd be crediting interest revenue. And then down here, I can do out some of this. We could have, miscellaneous expense. You could combine these two for miscellaneous expense, the check order and the collection fee. It really depends on how the company does things. I'm going to combine them here just because I don't have a whole lot of room. So we would be, I'm just going to call those both miscellaneous expense. And on the homework, or just for your own purposes, you might want to just say that is the 25 plus the 35, for what it is. And so that would be be 60, okay? The non-sufficient funds, we know that we have to be debiting the accounts receivable to put that back into that customer's account. And we'll try to collect it again, so we took care of that. Now, deposit error, that's not an account. But when you have a deposit error, chances are that would be the account to use would be sales revenue, okay? Because that would be what was misstated there. So that would be 100 here. And then the check error, that's most likely going to be an adjustment to accounts payable, okay? So when you have a check error, just think accounts payable. When you think a deposit error, think sales revenue. Okay, so that would be 792. And then, definitely just about out of space here, so you would be crediting cash for the 2260. And then you can double check to make sure you have everything right. This was your balance. You would have done a journal entry debiting cash for 4580, so plus 4580 minus this should give you that. Okay, so that's the next level of complexity. That's the bank reconciliation with a few errors. And the next one's even worse.